G'day investors and welcome to another episode of Stocks to Watch. Now today we're taking a look at Ioneer Limited, which is an Australian headquartered emerging lithium and boron producer, best known for its 100% owned Rhyolite Ridge Project in Nevada in the USA, which is positioned to become a key supplier of lithium and boron, not just in the States, but globally. I'm joined today by the Managing Director of Ioneer, Bernard Rowe. Welcome back to the show, Bernard.
Thanks, John. Great to be with you again.
Great to be talking with you as always. And yeah, it feels like the lithium market's starting to come back up, but obviously the boron market is an interesting one which we want to dig into a bit more. So first question off the bat here is the US has recently added boron to its critical minerals. What prompted that addition and what does it mean for the Rhyolite Ridge project?
So I think the addition of boron to the criticals list is more to do with the downstream processing than the raw materials. And I'll come back to the raw materials in a minute, but basically the US doesn't manufacture enough of some specialized boron-based products that are required for applications relating to national security and technology. Things like armor plating, body armor, permanent magnets, computer chips, rockets, shielding on rockets, the nuclear industry, that all of them use these very specialized boron products. And the US simply doesn't manufacture those. They import them. They rely on imports. And the bulk of them come from China. So it's really, I think the addition onto the list is more about that and versus the raw material, because boron deposits, as you know, from our previous conversations, that they're very, very rare. So there's not as if there's a lot of new deposits to be sort of found and evaluated. They are extremely rare deposits, and the US is fortunate in that it's got a couple of the biggest in the world in the southwest of the US, including Rhyolite Ridge. So Rhyolite Ridge can play an important role in supplying that material, the boric acid that goes to make those specialized products.
So you mentioned that boron's obviously one of these deposit types that don't occur often, and you've mentioned previously that Turkey is a major provider, but the US is another one. Now, just like to hop on to Rio Tinto sits less than 500 kilometers away from where you guys are at Rhyolite Ridge, and I understand that they've reported recently to the news that they're seeking to divest their US boron mining and processing business, and that Ioneer may potentially be interested in exploring an opportunity to consolidate the Nevada Lithium Boron project with Rio's California boron operations. Can you tell us more about why it would be interesting to Ioneer and kind of dig into that a bit more?
Before we continue, be sure to subscribe to our channel and ring the bell to get notified about our latest videos.
Yeah, sure. So yes, it is our understanding that Rio, for a start, are going to be running a process to divest that asset. I think that's less important here in this conversation. What's more important, and you touched on it, is that they're close together. They're both large boron deposits. One of them is a very long life mine, more than 100 years, and the other, Rhyolite Ridge, is the largest undeveloped boron reserve in the world. And so, of course, there are a lot of synergies to think about when you put those two assets together, because it provides you material, boron product, for many decades, a century into the future. But it also, because they're so close together, because they're both in the southwest of the United States, there's some logistical and other processing synergies that could exist as well. We've always thought that about these two deposits. The boron industry is a duopoly between Turkey and Rio Tinto, and in the future, that ownership of that Rio asset is going to change. But that doesn't change the basic premise that, or view, if you like, from us, that there are distinct synergies in having those two assets together in whatever shape or form that might be.
Yeah, absolutely. I mean, if there's a synergy available to be taken advantage of, it's worth having a look at. Well, it's not just boron, like you say. This project that you have. I mean, the main commodity in a lot of senses is the lithium, and there seems to be changing sentiment shift within the lithium market across all kind of social media networks and interviews, and even the price itself is starting to come back up. What, where do you see the energy storage needs of kind of AI driven growth to be inputting into this lithium demand in the coming years? And if so, what does that mean for the Rhyolite Ridge outlook?
Well, what we're seeing is a major shift actually in the views of the market as to where lithium demand, particularly in the next 5 years, is going to be coming from. And if you go back to the early 20s, I can remember people saying that static storage was so small that it wasn't really meaningful. It wasn't material to the overall lithium demand equation. And if you look back, that was right at the time, and that it was probably 5 and maybe 10% of lithium demand was related to batteries for static storage. The bulk of it was in batteries for electric vehicles. Now we're talking about numbers that are closer to 30% even today, and people are predicting by 2030 it'll be well above 30%, 35% from static storage. So there's definitely a big shift that's been happening for a little while now, and I think people are starting to realise just how significant that is. Why? I think the simple reason is that the cost of the battery packs has come down considerably, and hence they are much more competitive for those static storage applications where you need a lot of them. Big solar plants and battery backups at AI centres. You don't put a couple of batteries, you've got hundreds and thousands of them, and so there is a much bigger market, growing market than for electric vehicles. I think that it's going to play an increasingly important role in lithium demand. And again, some commentators and analysts are saying because of that, lithium, which was actually expected to be in surplus until the end of this decade, and then potentially even into into the early 2030s. Some analysts are predicting that there'll actually be a market deficit in as early as next year because of this static storage. So it is a fundamental change that's happening in the lithium-ion battery space, and as I said, driven by cheaper packs and the rapid growth in solar power and data centers that are very energy intensive and need backup storage.
Yeah, it's interesting to see how how the outlook has changed massively. Even though there's been a downtick in the potential for EV batteries, that's been absolutely swallowed and increased massively by the static story. So yeah, it's the lithium market's something to definitely keep our eyes on as investors. So
Yes.
back to your project specific now for Rhyolite Ridge. Do you want to run us through what the key accomplishments were at the project during 2025, and what catalysts we and investors can expect during 2026 to bring Ioneer closer to becoming a producer?
Yeah, sure, happy to. So it seems a long time ago, but the beginning of 2025 was actually a major milestone for us because we secured and closed the billion-dollar loan from the US government. It was just under $1 billion. So that loan, whilst we had it sitting there as a conditional loan, it closed in January of this year. So that was a great way to start the year. We then sort of pivoted, and for the most of the rest of the year, we're actually focusing on getting ready for final investment decision. And one of the key parts to preparing for a final investment decision is that we had to update all of our cost estimates, our mine plans, our resource, our reserves, or everything, because it had been several years since we had updated those numbers, including the capital costs and operating costs. And obviously you need up-to-date numbers as you move into into an FID, final investment decision phase. So what we did, I think it was back in around June, we put out new numbers for our economics. And we also, though, at the time flagged some opportunities that we said we would continue working on. And those opportunities were around optimisation improvements in our leaching process. And we've spoken about this before, and so I won't go into all the detail now, but basically what we were doing was we were processing more ore faster, but using the same amount of acid and exactly the same equipment. So there was no changes to the capital costs. But instead of putting about 2.4 million tonnes of ore through the plant, we were putting 3.4. So, a sizable increase in the tonnages that were going through. But as I said, using exactly the same equipment and using exactly the same amount of acid, and acid's our main cost driver. What that meant was that we increased the lithium production from the June number of about 19,000 to a November number of 28,000. So, an extra 9,000 tonnes of lithium carbonate, which at the moment is selling for about $10,000 a tonne. For boron, we increased it to 166 from 135. Now, again, I stress, we didn't really change the capital costs and we didn't change dramatically the operating costs. So, of course, most of that's going to your bottom line. And what it meant for us was we improved the internal rate of return from about 14.5% up to 18% IRR. That's an unlevered, so not including the debt in the calculation. For the NPV, and this is the big number, it went from being $1.4 billion in June to $2.2 billion. So an extra $800 million in NPV just by optimizing the leaching and processing an extra, roughly million tonnes of ore per year. And because we had such a large reserve backed by an equally and larger resource, we were able to do that without really impacting the longevity of the project, just by increasing the mining rate and then hence the processing rate. And again, another indicator of how important all of this was that we went from an all-in sustaining cost for producing a tonne of lithium carbonate. In June, that number was $5,750 a tonne or thereabouts. That takes into account the boron as a credit. So to produce a tonne of lithium carbonate after the boron is taken into account, $5,750 versus today the spot price of around about $10,000. That was back in June. Now we've almost knocked $1,000 off that, and so now we're looking at numbers around $4,630 per tonne. All-in sustaining cash costs are for producing a tonne of lithium carbonate after the boric acid credit. And the boric acid credit is the key, of course, to having that number so low, because so much of our revenue, 30-odd% of it, is generated from that boric acid. And as we talked before, it's important to the economics of this project, and it's also important to the strategic nature of the project, because it's so critical for the United States to have domestic supply that it can then use for those specialised applications.
That sounds like it well and truly puts your project into the lower quartile of the cost curve when looking at other lithium producers around the world. So that provides some resilience as far as I guess the volatility that we've seen in the lithium price over recent, especially 5 years. So that's fantastic. And obviously you touched on the extremely long mine life there, being able to really shift the optimization procedures to take advantage of that. So this is a super exciting project, Bernard, and I'd love to talk about it more. But thanks for giving us a rundown of what's going on at Rhyolite Ridge, and we look forward to talking to you again soon.
Yeah, no, my pleasure. Thank you, John.